Okay, let's dive right in. We're going to talk about Japan's economic crisis, but more importantly, what it means for your wallet.
Imagine waking up to find car prices doubled, your electronics delayed for months, and your investment portfolio suddenly shrinking. This isn't a movie plot. It's the ripple effect of Japan's economic collapse.
The world's fourth largest economy is in crisis, and what's happening in Tokyo could soon hit your wallet no matter where you live.
All right, so to really wrap our heads around the scale of this problem, we've got to look at the hard numbers.
First up, the number 4. This is a big one. Japan has officially fallen to the world's fourth largest economy. They've lost that long-held number 3 spot to Germany. Now, this isn't just about bragging rights. It's a massive signal of a deep, fundamental slowdown.
Now, take a look at this number. Japan's national debt has absolutely exploded to nearly 235% of its GDP. To put that into perspective for you, that is one of the highest debt ratios of any developed nation on the planet. It's a colossal burden that just crushes any real chance of a quick recovery.
And, the warning signs are just flashing red all over the dashboard. The economy itself is shrinking, exports are down, and back home, people just aren't spending money. They're holding onto their cash. This creates a really dangerous deflationary spiral, right? Prices fall, so people wait to buy things, which causes prices to fall even more. It's a textbook vicious cycle.
Look, a crisis this big doesn't just pop up overnight. This thing has been building for decades, right along some really deep economic fault lines.
You can actually trace the roots of this crisis all the way back to 1991. That's when a massive asset bubble burst, kicking off what's famously known as the lost decades. Then in 2001, the government tried to fix it with quantitative easing, basically printing money to get things going again, but it never really worked. And now they're hitting a demographic wall. By 2025, there will be just 2 workers for every single retiree. Think about that. It strains the entire system to its absolute breaking point.
And a huge part of this long-term stagnation comes down to this phenomenon of zombie companies. It's a wild concept. These are basically unprofitable businesses that in a normal economy would have failed, but they're kept alive by constant government support and incredibly cheap loans. So instead of fueling innovation and growth, they just suck up resources and prevent the economy from actually renewing itself. Okay, so how does Japan's internal mess become a problem for the rest of us? Well, it starts with the first shockwave, a total nightmare for our global supply chains.
And here's exactly why that matters so much. Japan has a complete stranglehold on some of the most critical materials for all modern electronics. They produce over half the world's silicon wafers, that's 53% to be exact, and a mind-boggling 88% of the coders/developers you need to make microchips. Without these things, you can't build, pretty much anything.
And this translates directly to the stuff you use every single day. We're talking about cars from giants like Toyota and Honda, the smartphone that's probably in your pocket right now, your computer, your gaming console. An economic crisis in Japan means disruptions, it means shortages, and ultimately it means you're going to pay higher prices for all of it. But listen, the supply chain is just the opening act. The even bigger threat to your personal finances is a financial time bomb just ticking away in the global markets.
So what does this number represent? $1.1 trillion. That is the staggering value of U.S. Treasury bonds held by Japan. They are the largest foreign holder of U.S. debt. Now, imagine a desperate Japan starts selling these off to raise cash. That could trigger a spike in interest rates for everyone.
And don't think this is just some hypothetical scenario. Japan's own finance minister has called these holdings a card on the table. It's a powerful piece of leverage that suddenly turns an economic crisis into a geopolitical one.
And this is where that financial time bomb could really go off. See, for decades, Japan's super low interest rates fueled something called the yen carry trade. Put simply, it means investors could borrow money really cheaply in yen and then go invest it in higher yielding assets somewhere else. It's become this massive $20 trillion web. Now, if that trade starts to unwind as investors get nervous and pull back, history tells us it could trigger devastating market corrections. We're talking potential drops of 40% in the S&P 500 and maybe even 80% in riskier assets like Bitcoin. That would hit retirement accounts hard.
This crisis isn't just about money and economics. It also forces us to ask a really critical question about the future of global power. Think about it. A weaker Japan creates a power vacuum in Asia, and that's an opportunity that China is perfectly positioned to fill. With Japan less able to counter its influence through trade and investment, Beijing could gain significant economic and political ground. That would fundamentally reshape the dynamics of the entire region.
Okay, so with all this risk on the table, what can you actually do about it? Let's talk about the warning signs and how you can prepare your finances.
All right, financial experts usually point to 4 key defensive strategies here. First, and this is critical, diversify. Make sure your portfolio isn't too heavily concentrated in any single market. Second, think about hedging against currency volatility, because both the yen and the dollar could see some wild swings. Third, you've got to stress test the supply chains of the companies you're invested in. Are they way too reliant on Japanese parts? And finally, look to real assets, things that tend to hold their value a lot better if all these supply shocks end up triggering inflation.
Japan's economic collapse is more than a regional problem. It's a global shockwave. If you depend on affordable cars, electronics, stable markets, or predictable prices, you're already connected.
The best defense? Diversify your investments. Stay alert to currency changes and watch the warning signs: rising debt, aging populations, and unproductive industries. The sooner we learn from Japan's crisis, the better prepared we'll be when the ripple reaches us.